Good morning. Good morning, everyone. And thank you very much for joining me. This is the morning market review. It's Friday and it's the 17th of November. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address, rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. I'd like to also just check, can you guys hear me? Just let me know if you guys can hear me. Good morning, Kim. Thank you very much. Hi, Michael. Good morning to you. Hi, Anna. Good morning to you. Thank you very much for signing in, guys. Hey, Raj. Good morning to you. Yeah, I had a terrific break. Thank you very much. All right, just keeping this high-risk investment warning on for a few moments longer. All right, let's just bring up the market commentaries disclaimer. Keep this on screen for a few moments. All right, thank you very much. And our references MarketScope 2.0 and TradingView. We'll go straight through to TradingView. So I was away for the week, but I want to just start off with the core inflation, which came out on Tuesday. And you can see how it's moving in that southeasterly direction. It's continuing to move down. And of course, we've got the EAs, which have gone into negative mode. This is the RSI. We usually take a look at the rate of change. I'm just going to add a rate of change underneath this, just to take a look at how the momentum. And you can see that it's moving nicely below the zero line, so it's still showing signs of deep. So no, there was no crypto minute on Wednesday. I've been away for the week. Thanks, Anna. So we've got the core inflation coming down. So with core inflation coming down, let's now take a look at the real rate. So we'll go through to the US 10-year. Okay, let's take the break even off of that, and let's see what we get with the real rate. All right, let's just go through to the weekly here. And we can see that it's coming down. The real rate's coming down. I'm going to go through to the daily here, and we've got the actually got a head and shoulders on the real rate. It's a downward sloping head and shoulders. Let's just put that in. Okay, let's see that. Let's just make this into a straight line. Okay, and you can see here is the left shoulder. Here is the head. And we've been looking at the real rate, and we've been asking the question, how much higher can it go? And it looks like we've got some sort of topping pattern here. Looks like we've got some sort of topping pattern here, and it's a negative sloping head and shoulders, so there's sort of acceleration to the downside. And what we can do is let's put a line here. Let's make this line a black dashed line because it's going to be our measure for trend. Let's just check the coordinates. 293. Let's just make this 293 as well. All right, now so let's just keep an eye and see how the real rate acts with regards to this black dash line as well as to the neckline. This is the neckline over here. This is the neckline over there. Okay, so we've seen that there's a moderation in the core inflation rate, and we're seeing that the real rate seems to be responding to that. Here's Tuesday's candlestick. You can see that there's this big movement down on Tuesday. That's when the core inflation came out. Let's put the US dollar underneath just to get an idea of what US dollar is doing. Okay, and you can see here, let's put our peaks and troughs in. We're on daily. Let's put in a peak over here. We'll just, okay. It's unfolding. It's unfolding fairly linearly. Okay, fairly linearly. Peak, trough. Okay. We've got the references in. You can here is the lower peak. Okay. Here's the lower peak, and here's the lower trough. So as we've got this head and shoulders on the real rate, we've got the dollar responding and actually moving down. Okay. Interesting, isn't that interesting? It's sort of the way that we've been examining this, that linear. So it's gone from inflation through to real rate, from real rate through to the US dollar. All right, let me just see if there's any comments here. Okay, no, we're all good. Let's go ahead, let's go ahead and bring up the, I'm just going to see if I can get this. There we go. Okay, there we go. That's better. All right, and let us, there we go. All right, we'll come to the NASDAQ in a moment. Let's just go back to the US dollar. Let's do our top-down analysis. Yeah, exactly, Raj. It's unfolding exactly as we thought. So I'm just bringing up the US dollar here on our main layout, and what we've got here is, let's take that out. Let's take this out. We've got the reference candle here. That's the reference candle. It's the highest high in at least 3 candles. We can use this one as well. Okay, if we use this one, it actually turns out to be a complex reference candle, but this is a sort of a cluster here, and now we've got the follow through and the completion of the bearish reference candle. We've now moved towards that 30-week exponential moving average, and that 30-week exponential moving average acting as support, but it's flattening. And we want to see now if we've got this head and shoulders top on the real rate, and if that goes ahead and breaks the neckline, we want to see if the US dollar will break below the 30-week exponential moving average. And then we want to see the exponential moving average roll over as well. And a little bit of support coming in for the US dollar. We'll take a look on the daily chart just to look at this area here, because there seems to be some sort of resilience here. So let's go down to the daily chart and let's look. All right, now here's that. If we take a look, we've got a peak, trough, lower peak. We've got the peak, trough, lower peak, lower trough. We go back to, and we can put in we'll put it over here, peak. I'll just put it in as a P, T, okay, lower peak, LP, okay, here's the LT, all right. Which zone are we in? We're in zone 3. We're between the lower blue and the lower red. So we are in the bearish area, and you can see how the zigzag is unfolding. You can see how that, and now we've got the correction over here. So now we're looking to see if this is a potential rally in the downtrend, right? Because you can see we've got the lower peak, lower trough. What about the momentum? The momentum's to the downside. Okay, can you see that? The momentum's to the downside. So there does seem to be, if I go back to the weekly chart, there does seem to be some support around this 13,000 area. But at the same time, there looks to be some resistance at the sort of 13,200 level. So we kind of range bound here on the weekly, just over the last 3 weeks. But okay, when we take a look at the daily, we can see that there does seem to be some force that is trying to work the dollar lower. And if it's trying to work the dollar lower, okay, well then it's in zone 3. Then let's go down to the hourly chart. Let's just see if the hourly chart here is going to give us the signal to the downside, right? So we'll go down to the hourly chart, and let's clean this up somewhat. Okay, let's just clean this up somewhat. Okay, you can see here is the inflation data coming out. See that? That's the inflation data coming down. And let's put some classical let's apply classical technical analysis to this. So we've got 1, 2, 2, 3. Okay, this is conjecture. Okay, so because we are in zone 3, I'm assuming that at some stage we are going to get the swing. But let's just bring up Microsoft Paint here. Before we do that, just look at this 1, 2, okay, 2, 3, right? Now let's go through to Microsoft Paint. I'm just bringing that up. One, 2, 2, 3. Now these 2, 3, 2, 3, okay, that's the correction. It's the corrective move. Usually a corrective move unfolds in one of 3 ways. So it would be like this. 1, and then we would get some sort of perhaps a wedge. Okay. Remember, it unfolds one of 3 ways. This is the first way. Second way would be perhaps a flag. And then maybe the rarest of the 3, but still needs to be, is some sort of pennant. Okay, so either get like a wedge or a flag or a pennant. Let's go back. What have we got here? All right, let's see if we can put this into some sort of pattern. I'm not sure I've got it quite right. Let me try that again. Okay, so kind of watch it in terms of this flag pattern. I don't see it as a wedge, some sort of pseudo flag. Let's see. So what we want to do is we want to see if there's a breakdown in the EMAs, okay, and then we want to see if there's a breakdown in the stochastic. Now, if we get a breakdown in the EMAs and we get a breakdown in the stochastic, that's the 2 triggers, but it really doesn't matter until we get a momentum swing, and that's registered when the stochastic goes into that lower quintile. So it does look as if this is a corrective type of action that's been going on just over the last 2 days or so. I think this could be a potentially lucrative setup. Let's just keep an eye on that. He's just gone top of the hour. So we'll take a look at some of the risk markets as well. But we want to see if we get this cross down. And we want to see if we get the cross down in the stochastic. And then we want to see if the market cooperates and if we get the movement down to that lower quintile. Where we can see the effects of the real rate on that head and shoulders in the real rate, NASDAQ. Let's go ahead, bring up NASDAQ. Give me a moment while the NASDAQ downloads. All right. This is a good chart to analyze. I like the analysis here. This is a really nice analysis. What we've got here is several technical signals. We'll start off here. We've got a reference candle to the upside. Okay, you can see that's the lowest low in at least 3 candles. Then the candle to the right closes nicely above it. We spotted that one. Okay, we spotted that one. Then we looked at the downward sloping line. It broke out last week. Okay, so we're now above this. We're now above this downward sloping line. And although it's a longer term chart, this is potentially your correction, right? It's potentially your correction. We've broken out of a flag. Take a look at that 30-week exponential moving average, how we're now above it, and the 30-week exponential moving average has lifted right up. See how it's moving in that northeasterly direction. Terrific. And then we've got the RSI nicely above 50. Let's take a look at S&P 500 on the weekly basis, and then we'll take a look at DAX. Okay, let's just bring up SPX 500. Just give me a moment for this to download. And you'll see all the risk markets have a similar pattern, but they're either leading or lagging, whereas the NASDAQ seems to be the leader. Okay, the S&P 500 again got this nice reference candle reversal. It's above the downsloping trend line. Okay, what about the momentum? Okay, the momentum is now above 50, and importantly, okay, above that 30-week moving average, and the 30-week moving average is kicked up. So that's good. Now, the real sort of test, the DAX, because the DAX was lagging the American indexes. So let's just go through to DAX and take a look there. Just give me a moment. It's just downloading, and then we're going to take a look at gold just to end off. I beg your pardon, there's a slight delay here with the DAX downloading, should come through now. Okay, DAX playing catch up. DAX playing catch up. So this is the DAX. Here's the reference candle. Okay, let's take out the trends. Because now the DAX has pushed above that 30-week exponential moving average this week. Okay, this week it's pushed above. It's got to close above it. It should close above it, and that 30-week moving average starting to kick up. Okay, so DAX playing catch up here, and then you can see the RSI just popping 50 as well. So definitely seeming to lag the American indexes, but certainly showing its potential for catching up. So even the DAX looking quite strong, and that's as that real rate comes down. Why is that real rate coming down? We're looking at the core PCs coming down nicely. All right, let's take a look at gold. Let's bring up gold. Remember, we are seeing some moderation in the dollar. Theoretically, we should be seeing some sort of strength in the dollar, in the gold, in the precious metal. Let's see if that is indeed happening. Just another moment for gold to download here. Okay, here we are. Okay, so what I'll do here, this is just, it's quite interesting. We've got this 1, 2, here's the 2, 3, and now we're looking to see if it's going to break up to the upside. You can see, of course, that it's above a 30-week moving average, the 30-week moving average pointing up. But what I want to do here is I'm going to combine, because I think it's really going to be useful in this context. I'm going to combine last week's red candle with this week's blue candle. So what we're going to do is we're going to take the high, which is last week's high, and the low, which is this week's low. Okay. We'll take the open. Okay, so the open is just off the high, somewhere there. Okay, where's the close? Close is just here. Isn't that a terrific bullish candle in terms of the 2-week sentiment? So you've basically had where the bears push price down to the low. They subsequently go down to the bears push price down to the low. They lose control. They lose control at the low, and then the bulls have pushed price right up. This is so almost what we call a dragonfly doji. So some real bullishness coming through. Raj, we did the S&P. Do you want me to do it again? Just let me know. I can bring up the S&P. We've taken a look at it. I'm just seeing your message now. Oh, you missed it. Okay, I'll just bring it up. So gold looking terrific. Gold looking terrific here. So here's the S&P. So you can see it's broken above this downward sloping trend line. Here's the reference candle reversal. It's above that 30-week moving average, and the 30-week moving average trending up nicely. Look at the momentum above 50. So going into the end of the year, it looks like we've got this risk on move. By the way, I did write an article on the potential for a Santa Claus rally. I don't think Santa Claus rally is very specific. It's the week leading into Christmas and in the first few days of the new year. I don't know if, I mean, the Santa Claus rally sometimes happens, sometimes doesn't happen. But what's interesting, what I think is interesting, is that what we can do is we can take the NASDAQ 100, we can divide that by the SPX 500. Okay. And let me just fix this up. And what you can see here is that we've got a movement up. The NASDAQ is outperforming the S&P 500 because this is a relative strength chart. That's weird. I don't know what I did there. Pasted something. Let me get rid of this. That's weird. I don't know I could do that. I pasted a dozen of these things in. Well, that was weird. Okay. Anyways, what you can see is with this upward sloping channel, NASDAQ is outperforming the S&P 500. And typically, when you've got the NASDAQ outperforming the S&P 500, you do have a risk on type of atmosphere. So I think going into the last 2 months, as long as we've got NASDAQ outperforming, things are looking pretty good from a stock market point of view. Risk on caused by hopeful Christmas boom. Yeah, it could be. There's a couple of reasons for the Santa rally. Some say it's a tax effect. Some say it is optimism, as you're saying, James. But it does look as if we've got some sort of potential for a rally toward the end of the year. All right, that's as far as we are going to go for today. It's wonderful being back, and thank you very much for everyone signing in this morning. I want to wish you all a great weekend ahead. It's not on the website. It's actually been submitted for publication, and I'll let you know if it gets published. All right. All right. Let's wrap up here, guys. Thank you very much. Have a terrific weekend. Catch you on Monday. Cheers.